market. As we all know, there are market capitalization, which is called large cap, mid cap, and small cap. Large cap, top 100 stocks, mid cap from 101 to 250, and then small cap from 251 to 500. Just to give you a brief, from 2006 till last year, I'm talking about calendar years, we have seen large cap being 7 times winner in that calendar year. When I say winner, is the best performing segment. Mid cap has been 4 times winner, and small cap has been 8 times winner. What this reflects is that there is no constant leadership across the various time frames. And now this is one set of the story. The second set of story is if you talk about last 1 year. As you know, Nifty 50, which we talk about, has given almost 10.5, 11% returns. I'm talking the data as of 30th of June. So last 1 year. Whereas BSE 500 has given 16% returns. And that obviously shows that the mid and small cap has taken up the rally. But within this gamut, there are certain sectors which has done good, which I'll probably say Nifty Reality was 41%, BSE Telecom and BSE Power was almost 36% plus, and we have sectors like Nifty FMCG and Nifty Media showing negative returns. So what I'm talking to, what is the reference out here? The reference out here is there is no perfect strategy or there is no straight line approach towards this market. This market is very volatile, very unpredictable. Definitely a lot of research really works help, but for a layman to understand each and every segment and sector is becoming more and more challenging. To discuss this, and that's where we come to our topic, multi-cap strategy to identify opportunities. So I'll request Siddhartha, Mr. Siddhartha, who is part of Franklin Templeton. He is Associate Director and Head of Business Development to be here. And we are here to talk about Franklin Templeton Multi-Cap Fund. Over to you, Siddhartha. We will be happy to talk to you about what is this fund all about. And this is a new fund offering which has been research approved by HDFC Group. So what is in it for our investors, which will really make the difference? Over to you.
Thank you, Abhishek, for having me, and really appreciate the support of the HDFC Bank and HDFC Securities for having selected this fund. You have a very robust and stringent research process, and this fund has passed the muster of going through the entire due diligence bit and getting finally approved in your scheme of things. Quickly, I will start with a quick point that it's all about reflect, refresh, and renew. And the way we are talking about this fund is getting 3 things together, and we are calling it Ek Jagah Jab Saath Ho Tino, to maza aa jaye. That is large cap, mid cap, and small cap. And large cap, mid cap, and small cap, while these are technical terms, but I would say one does reflection, one does refreshment, and the third one is all about renewing vigor. And that's where this 3 connotations of reflect, refresh, and renew comes in. Clearly, you touched a very valid point that what is the next big thing? So we are talking about this decade belongs to India. It's hunky-dory everywhere. We have got the election has just got over. The market just saw 1 day of correction, and then people have been largely sitting on the fence and thinking about participating. And I keep getting this question, you are bringing in an NFO at these levels? So what is the thought there? And I was in a flight, I was actually traveling to a different branch, and I was just thinking with the same kind of question which would come during my interaction with the investors. Really appreciate the kind of cognizance they have taken in terms of how do we participate and navigate such kind of volatility. So what I did is I'm a guy who likes numbers, and I thought rather than talking subjective, let me build up some orientation as to how the numbers look like. So what I did was, just from a simple understanding perspective, and I'm not trying to make it complicated, I thought I will look at numbers as to how numbers stack up. So before saying that how the next 5 years or 10 years look like, and how does 80,000 Sensex level look like, I thought I will build it up with some numbers in terms of how the last 20 years have done. how the last 2 decades have done. So if I have to build a trajectory of 2004 and 2014, Sensex has moved by 5 times from 4,800 to 25,000. P, the price earning, which is actually a metric of valuation, have moved from 15 to 19. So while the Sensex has moved 5 times, the P's have just moved by 4 points, and it's not very expensive. And the SIP gross sales, which is the retail investors' participation today, is 21,000 crores. In 2014, it used to be 1,200 crores only. And number of SIP accounts, number of folios used to be 60 lakhs. Today, it is 8.76 crores. So 8.76 crores folios. 2.2 crores used to be the demat account holders in 2014. Today it is 15 crores, and 10 lakh crores is to be the mutual fund AUM. Today it is almost 60 lakh crores. So what we are essentially saying is the fact that what seems that it is absolute very high, but relative wise, it is not that high. And you know what? Then I thought, how does 2034 look like? And I kept it blank because it is all good guess of yourself and mine as to if this is the trajectory which has got built up with 5 times and 3 times with the Sensex growth. So from 2024 to 2034 is what I want all the investors and ourselves to think about and put these numbers somewhere. The other way to look at it is I was talking to my fund manager as to how does he look at the markets at this time, and he put it very simply that every time the all-time high number will be a high number because there will always be an all-time high, and whenever you are in the participating in the market, you are at an all-time high. So you know I don't want to tom-tom about this, but we all know that India is hitting the right chords across matrices, be it the fastest growing economy in the world, the fifth largest by market capitalization, fourth largest by forex reserves, second largest by internet users, highest amount of YouTube users vis-a-vis the US, iPhone production in India to hit a 25% mark by 2025. All of these are good points to have. Also, from a GDP ranking perspective, I think from the year 2000, we have moved to 2023, where we are currently number fifth globally, and we are in the trajectory of reaching number third globally. Interesting slide which talks about how India is at the same place where China was 15 years back. Interesting to see that both by nominal GDP, which is inflation adjusted, and by per capita income, which is essentially a metric of how much an individual person earn, we are at the same level where China was 15 years back. You do nothing, you just replicate the kind of growth and infrastructure and the build up what China has been able to do, and you just reach where China has been in terms of the overall trajectory of growth. 2018, India's contribution to world's GDP was 7%. Fast forward to 2028, we expect India's GDP to contribute 9%. So from 7 to 9, there's a tectonic 2% jump what we are expecting. These are all voices about India. While we talk about इंडिया बीइंग सो वेल, हम लोग यही बात करते रहते हैं हमेशा कि इंडिया बहुत अच्छा कर रहा है, ये हमारे देश है. But at the same point in time, it's very important to have the outside in view as well, rather than only the inside out view. So you can see multinationals like BlackRock, L'Oreal, iPhone, HSBC, Goldman Sachs, all wanting to set up their shops or continue improving or expanding their shops in the large demographic advantage what India has currently. So given this backdrop, what are the investment opportunities? Clearly, a Nifty 500 offers a very good diversification of 70 large, 19 mid, and 11% small cap. But when I look at actually the opportunities, it is in a different segment altogether. So let me give you some numbers again. Over the last 3 years, all the new listings of the companies, we have seen 83% has happened in the mid cap space. 14% has happened in the small cap space, and only 3% has happened in the large cap space. So, given this, all the newer companies, the newer ideas are coming through the mid and the small segment where the unique opportunities are actually lying. Is large cap bad? No, large cap is very good. But then large cap companies do not have the ability to give you that delta of the risk reward ratio what you get from a mid or a small cap. So I think the new opportunities in the listed universe are more towards the small and mid cap. And the whole idea is to capture all of this in one fund. And how do I do that? It is about putting 25% in large, 25% in mid, 25% in small, and manage the balance 25% more like a flexi, right? And that's where I introduced Franklin India Multicap Fund, which is like we have abbreviated it like scaled up, which is strengthening consistency, allocation between large, mid, and small. A stands for allocation, L stands for long term, E stands for enhanced diversification. And that brings me to the positioning of this fund. एक जगह जब साथ हो तीनों, large cap, mid cap, and small cap. The new fund offer opened yesterday, which is July 8th, and the new fund offer closes on July 22nd. It's called Franklin India Multi-Cap Fund. As I said, the structure of the fund will be 25% into large cap, 25% into mid cap, 25% into small cap, and the balance 25% will be based on a framework. And I'm going to touch about this framework a little deeper in the coming slides. Overall universe of sectors, 22 sectors across large, mid, and small, blend of growth and value. And we also have the ability to invest in real estate investment trusts and a couple of foreign securities. While it is just an enabler, but if we see a juice there, if we see an opportunity there, we will not restrict ourselves to invest there. Why a multi-cap combination is better? Uh, Again, numbers from 2006 to 2023, what we have done is we have plotted which market cap has done the best, followed by which one, followed by which one. So in 2006, if I have to read this, the best market cap which has done well is large cap, giving 40% return, followed by diversified, which is 36% return, followed by multi-cap, which is 35% return. Similarly, 2007, 2008, 2007, the best was small cap, 97% return, followed by mid cap, which is 78% return, followed by 71%. So you would see erratic movements between 2006 to 2023. कभी large cap ने अच्छा किया, कभी mid cap ने अच्छा किया, कभी small cap ने अच्छा किया. But the whole idea is to stack it up in one bucket, and you would see a line in the middle, which is the purple line, which is the multi-cap index. So multi-cap index is never too aggressive or never too conservative. It has a steady state kind of an allocation, which actually helps for a retail or mass affluent or HNI investor even to have a steady state allocation which is not very highly volatile. ना ऊपर जाएगा बहुत aggressively, ना नीचे आएगा बहुत aggressively. Steady state आपको एक returns देता जाएगा, which is consistent. Franklin India Multicap, I come to the fund's investment strategy. As I said, large, mid and small में 25-25-25% करके allocation रहेगा और last का 25% allocation रहेगा एक 3-factor framework के ऊपर. 3-factor framework, what are these 3 factors? Factor number 1, performance of small and mid cap over large cap. कितना डेल्टा आएगा स्मॉल एंड मिड कैप के ओवर लार्ज कैप सेगमेंट. दूसरा पहलू, relative valuation of small and mid cap over large cap. Third nuance, the macro stability factors. The macro stability factor is very important because your interest rates, your gross, your GDP, your balance of payments, your kind of ecosystem of taxation, all of these will matter as to how this broad framework would work, right? Let me move on to the next slide. There's a quick slide, 30 seconds on this slide. We are going to use both a top-down and a bottom-up approach in managing this. If I use a top-down approach, rising GDP per capita of a country actually helps us to, uh, you know, get more money by virtue of salaries or businesses, which eventually helps us to have a higher disposable income. And that also looks at, more urbanization. So you would see today a farmer's son doesn't want to become a farmer. He wants to be more educated. He wants to come and, square off a life in the urban areas, maybe take up a higher studies. So that leads to a better quality of life, better urbanization from their perspective. All of these factors actually, the rising GDP, the consumer disposable income on a high, and urbanization actually cumulatively increases consumption. And consumption hoga kahan? Consumption hoga in themes like where I would be spending on premiumization, which is like spending on a better quality of life, consumer credit. Now I'm talking to HDFC Securities customers. HDFC Bank is a large bank. Let me give you a data. There are only 4 crore credit card holders in the country. There are 4 crore credit cards. And there's a population leg of 140, 150 crore for the entire country. Now, not all of them would be justifiable to be lending across, but there's a whole big opportunity of people having better CIBIL scores, and there's a need for integrating this mass population in the banking ecosystem. And that's where the Bharat UPIs and the ecosystem of the Jandhan Aadhaar and the JAM, all of this are coming into congruence to be able to fructify and have companies which are around working around consumer credit. Then comes the urban housing and, of course, the financialization of savings. So, investment in capital market companies and also in AMCs, where we have seen a tectonic rise in the AUMs over the past 5 years, 10 years, 7 years. And today, currently, we have 60 lakh crores as the mutual fund AUM, which is just 30% of the banking deposits in the country. So, there's a huge opportunity. So, all of this being a top down theme, what are the sub themes or what are the sectors which evolves from these themes? One is definitely aviation. I used to, maybe somebody used to fly a economy. uh, Now the person is looking for a premium economy, and maybe over a time he would be looking only at a business class. Travel and leisure, maybe we were happy with a 3 star, but now when we plan our holidays we would try and look whether a 4 star or a 5 star is available, and whether there is some good freebies, good offers. Then the real estate, financial services. So these are the kind of sectors which evolves from themes like what has come from the top down sectors. And once these sectors are selected, then it has to pass the muster of Franklin Templeton's secret sauce, which is the QGSV model. And the QGSV model talks about Q for quality companies, G for growth, companies which are giving better growth prospects than the benchmark, S for sustainability, companies which are sustainable. Not all businesses are sustainable. Classic example, while tobacco is a business, but over a long term, it may not be sustainable. And that's why there are companies which are in the tobacco business also trying to diversify into grocery business, into hotel business. And lastly, the V is for valuation. So I think this is a good structured framework what we have from a QGSP perspective as to how we are going to invest this money. These are some of the potential themes for Franklin India Multicap Fund, and we see enough and more themes availability in this space across large, mid, and small segment, be it any sectors, be it any themes. And we expect most of the availability of newer ideas and newer companies to be in the mid cap and the small cap space. Uh, why FT? Why Franklin Templeton? Because simply, if I look at the vintage or the experience, what we have managed blue chip, prima, and smaller companies, which is large cap, mid cap, and small cap, we have been doing this for close to 2 decades, be it the bare minimum, and more than 3 decades at the higher side. So blue chip has got 30 years of vintage, Prima has got 30 years of vintage, smaller companies have 18 years of vintage, and people have made 200 30 times, 214 times, and 16 times kind of money over a long term period if they would have stayed invested. So, if I can club all of these expertise into one fund, that is Franklin India Multicap, because it is going to have 25% large, 25% mid, 25% small, and the balance 25% is going to be based on the three factor framework, which is going to be managed more like a flexi. 5 reasons to own multicap. I think this is a good way to look at it. India is a multi-decadal growth story. As I showed in my first slide, it's not about the next 1 year, next 2 years. It's the decade jump, which is promising. And if you don't invest in equities, as Abhishek highlighted towards the beginning of the call, we stand out to lose because it's the only asset class which beats inflation. Third, within equities, best of the opportunities are in the smaller and mid cap segment, because that's where the new age tech startups, product linked incentive beneficiaries like the electronic manufacturing, etc., comes in. And then the natural question is, if it's multi cap, why not flexi? The reason is that flexi can go either ways. Flexi can go 100% large cap, 100% mid, 100% small. It depends on the complete flexibility of the fund manager. But at least Security and Exchange Board of India, which is the regulator, has given us buckets where you call a multi cap within the guardrails of large cap, mid cap, small cap, and a balanced 25%. So it does not allow the fund manager to go beyond the mandated 25% exposure, which works well from a risk mitigation perspective. And multi-caps can offer the best of not both worlds, I would say all three worlds, because diversification benefits actually works very well across the three market segments. Uh, as I shared this, lastly, why invest in Franklin India Multicap? First of all, we have a long track record of successfully managing these funds. As I said, blue chip, prime, and small co. Second, we have a little bit of differentiating factor. There's a three-factor framework which we will use to manage the last 25%, which will be slightly different from us, and it's more of a quantitative framework which we'll use. Third is the ability to identify themes, right? And I think it has been proved very well by one of our fund managers managing one of our other funds, which is India Opportunities by Kiran Sebastian. He has been excellent in identifying these opportunities, and he has really demonstrated success where the fund has moved from a 400 crores to a 4,000 crores kind of a AUM over the last 12 months to 18 months. And of course, last but not the least is the franchise, the equity franchise of Franklin Templeton really stands out. We are a global firm, and there's a lot of exchange of ideas and thought process between the India team and the international teams, and the QGSB model, which I already explained, of quality, growth, sustainability, and valuation. Uh, Rich vintage, 2 funds, 30 years, 9 funds, 25 years, 17 funds, 20 years, and 25 funds, 10 years. Long story short, three-fourths of our product offerings have completed more than 10 years. Essentially, if you start up a business, you pay the person who's more experienced a little more salary than the person who is not that experienced, merely because of the fact he has seen more seasons, he has seen more challenges and opportunities, and that's where we stand out from a product, vintage, and a franchise perspective. Uh, why Franklin Templeton? While most of you know Franklin Templeton from a global and local perspective, but just to bring a perspective, we manage $1.6 trillion of assets globally, which translates into 136 lakh crores, which is almost more than 2 times the Indian mutual fund industry. We are in India for the last 28 years. Uh, the setup stage of Franklin Templeton Global was in the year 1947, which is the year of independence for India. Our commitment towards India remains steadfast. Long-standing product vintage with three-fourths of our product offering covering more than uh, 10 years of vintage, and a very strong investment management process. This is our equity team structure. More than collective experience of 2 centuries across the portfolio management team, and there's an average experience of 16 years in the equity franchise team of Franklin Templeton. These are the 4 gentlemen who will be managing this fund. Janki Raman is actually the lead manager. Janki Raman is actually the CIO, not the lead manager. The lead manager is Kiran Sebastian. We have Akhil Kalluri, who was the sector analyst earlier for Mid and Small Cap, but he's taken up the responsibility of being a co-PM for the Franklin Multicap Fund. We have Sandeep Manam as well. All of them have got uh, quite cohesively worked together within the Franklin Templeton ecosystem. You can see the number of years they have been with Franklin Templeton and the industry experience they bring in. Uh, Fund information, 8 July, it opened yesterday, 22nd July, it closes. It's a blend of growth and value, managed by 4 gentlemen who have been very seasoned fund managers. Minimum amount of 5,000 rupees. SIPs, STPs are available during the NFO period. The benchmark is Nifty 500 Multicap, which is the 50, 25, 25 index. Exit load 1% if redeemed before 1 year, nil after redeemed after 1 year. So I'll quickly stop here. I wanted to quickly give you a perspective as to how the fund stacks up, and I will go back uh, and hand over the thing to Abhishek to take it forward from here. Happy to have a conversation, Abhishek.
Well, so that this was really very elaborative. And before I share some questions which are there in my mind, I will request all the customers, attendees on the call, if you have some questions, please put it on the chat box or post it on YouTube if you are there on live. This fund is available. This fund is available across platforms. So Invest Right, which is our app, investing app, our trading portal. You can ask your RM to help you to transact on this particular fund. And obviously Sky and Invest Now, which is with HDFC Bank linked as an Invest Now. So quickly, just to tell each one of our investors who have joined, look, multi-cap as a strategy, we as an ourself, how we evaluate. Whenever there's a new opportunity or any fund, there are 3-4 parameters on which we evaluate a company. This is the pedigree, the past performances. When we say past performance, it's not about just past returns. It's about how much risk they take to generate a certain set category of returns, and those are the parameters which we apply when we evaluate. Also, we keep a very strong understanding on how the fund is managing how the fund is managing in the best in the best times of the market and the worst times of the market. There are certain ratios which we which we evaluate, and then only a fund becomes a part of our overall product recommendation basket, wherein this new fund offering does qualify. Normally, there's always a question that why one should invest in a new fund offering, and this is most relevant at this point in time because when there is a new fund offering, the entire portfolio is freshly created. There is no backlog, so whatever allocation comes up in this fund, the fund manager will have a window of 15 to say 45 days where he will deploy this fund into various opportunities which where he feels confident, and that will be not a single day's market. We know we are in a peak market and we'll keep on hitting peaks, but you are not entering a peak. You are getting your portfolio created over a period of 15 to 45 days. That is as per the fund manager. Whatever they are chasing, whatever they're looking at to buy, whenever they find right opportunity, they'll participate immediately, maybe during the NFO or as the NFO ends, or maybe they may take a few days more, because the advantage, some advantage budget can also bring in, but we don't know. And that's all lies why an NFO really becomes more attractive in these kind of markets where we are entering nearly at the top. Okay, now since there are a lot of questions, before I post my questions, so that I'll quickly run through customer questions. Some very simple questions, which is what is the entry load? I just there's no entry load. There is a fund management fees. So how the duration of time you remain, keep your money invested, that is, there is a fees which is being charged to manage your fund. That it is, what is the exact annual fund management fees? So that we have a ballpark number. So if you can just share it, there's an
Yeah.
investor knowing.
So we will only get to know this once the entire collection happens. It is tiered,
Right.
as you know, and
Yeah.
it will depend on the overall collection. The ballpark number, I mean, if I can take a rough guess, is going to be around 1.5 to 2%. It depends on how the entire portfolio gets structured. It can be slightly more than 2% as well because of the GST impact, etc. But but that should not uh, refer or deter anyone, because that is the fund management fee and not a load to your question. And
Right.
the second thing is, it is an expense you pay not to enter or exit a fund. It is an expense you pay for the intelligence the manufacturer brings onto the table.
Right. 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 There's a simple question on why NFOs are tagged as high risk. So, so they are not tagged high risk. It depends on the which category of fund it is there. This is equity category, and as per regulator, any equity fund needs to be a
Correct.
high risk fund because this is a pure 100% equity fund. So there's nothing called NFOs are high risk and other
Ah,
regular funds are not. Every equity fund, any fund which
correct.
has equity exposure, they are a high risk because equity as an asset class is has a tendency to be very volatile, and that's why we recommend all the investors who are looking forward to participate into equity oriented funds should look for long term, 3 to 5 years, because we are talking about India growth story next 10 years or a decade kind of investment. And examples, a very fair example of this is probably the, if any one of you can check the NAV of Franklin India Prima fund or a blue chip fund. So these funds were launched with 10 rupees NAV, and they are higher,
Yeah.
probably triple digit NAVs now. So so that is what it has become. So definitely it's a good time, but definitely it's a risk item. So anybody who believes they are therein for long term, they have an asset allocation for higher risk asset class, you can look forward for this fund.
So
So
I
that
I
is
just want to
also,
add,
yeah,
I just want to
please.
add, and Abhishek, you really brought in this very interesting point. It's investment is a very passionate subject for all of us. There's a
Right.
risk in equity investing, but there is also a risk of not investing in equity, and that's where I call out the risk that if there is steady state inflation of 6% every year, then you will have to invest in an asset class which is giving you more than 6%, so that there is absolutely some real rate of return. And there is hardly any asset class outside of equity which gives you a better return or a higher return than a inflation. And that's where, to bring in Abhishek's point, while there is absolutely risk in investing in equities, there is no doubt about that. But if you do not invest in equities, and need not be only this NFO, it can be equity as an asset class I'm talking, there is also a risk of not investing in equities, because then you get hit by the net present value or by the inflation, which is going to be a dacoit in your purse. Sorry, back to you, Abhishek.
Sure. Right. Right. They are simple stock related questions. I'll quickly close them myself. So do you invest in high frequency trading? So you want to take that, Siddharth? Because
No. So I will say in very simple terms, we are long-term wealth creators. I really like the way that Abhishek said that you have a runway of 15 to 30 days to invest this money. Please let me be very clear. We are not going to wait on cash and wait for 1 year when the market will fall and we will invest. It's a steady state allocation.
right,
It's a long-term call. So you should invest for the next 3 years, 5 years, 7 years, as I showed, for the decadal opportunities. While a stock allocation can be really aggressive, but a mutual fund allocation will only reap benefits if you invest for slightly long term. So no cash calls. You see most of our portfolios being slightly technical. You will not see too much of churn in our portfolios, right? So most of our portfolios we have been holding on with more than 50, 60, even 70% of your portfolios not changing at all. But it is like that over a long term, the real yield comes up. So the the when you look at investments, I think you don't invest money. And let me be very clear, all of you will be thinking that, What are you saying? Because you invest money." I think one invests not money, but one invests time, because you don't have the time. If I give 20, 30 years of wealth creation, then I'm giving my 20, 30 years. And you have to be very judicious in your decision as to where you invest in this 20, 30 years. So I think what you invest essentially is time and not money. And you'll have to choose that which asset class, how, and which avenues can actually lead you to that wealth creation journey. Back to you, Abhishek.
So there's one simple question, but relevant could be uh, knowing that there are multiple NFOs, the investor wants to know with no past performance, how can we choose this fund? Or what are the key things which we should look forward to choose this funds? So I'll add from our side, this is
Yeah,
for all the investors of HDFC Group. You be rest assured, we from our research team has analyzed how the fund is is expected to operate, and we are very confident that this fund should really justify the what it is saying. But if Siddharth will also like to add on it, so Siddharth, over to you.
sure. So, I'll just give you a very simple understanding. While there is a complicated way of answering, I will not do that. To put it very simply, NFO does not have a past performance. Agreed. But as Abhishek put it, there is a robust mechanism of research process which has gone into, and that due diligence process has not happened in one meeting. There have been days of conversations, model portfolio analysis, which are the kind of stocks we will pick up, which are the kind of sectors we'll look at. Post that, this new fund offer has got approved. I do not want to talk about the past performance. Let me also give you a quick element of understanding here. Franklin Templeton is coming out with an equity NFO. Guess after how many years? Abhishek, you want to take that?
Yeah, it's I believe 13 years.
15 years. You are bang on. So अगर 15 साल बाद हम लोग एक NFO लेके आ रहे हैं, I could have easily shown you the past performance of my 15-year-old track fund, which was Build India Fund. And it's a stupendous performance. But I don't want to talk about that fund and then position this NFO. There's no point in that. But the very fact that we have assessed the importance, it's a 1,40,000 crore market segment. Over the years, it has really evolved as one of the needs for the retail investors. And we appreciate that need, and we want to bring our offering in forth in front of the retail investors as well as the mass affluent and HNI investors. So there's a reason, there's a thought process why this fund, how this fund, where this fund, and eventually how the performance will unfold. Abhishek, I think you are on mute. I can't hear you.
Sorry, sorry. So I think that brings us to the last question, which is fairly very simple for me to answer, is how to
Yeah.
apply. So knowing that we have large set of audience who are using multiple portals. So on Invest Right app, if you go on mutual funds, there's an NFO section. That's where you can apply. If you are using Sky, you can search NFO or this name of this fund, you can apply. Or in Invest Now, this is anyways there's a banner on this. So this is fairly easy to apply. Or the best is you can call, if you can't find it, you can call our customer care and they can help you to apply from your account. And that's fairly simple about it. If any investor who wants to have a more detailed note, yes, we have a note available. Please reach out to us from the customer care side or your relationship manager. We will be happy to share you a detailed note on this fund and what are the rationale behind investing in this fund. And if you have further questions, because I see there are one or two stock specific questions, I'm skipping those because that's what not the intent is. So So that's it. Siddharth, thanks a lot for your time.
Thank
It
you.
is really pleasure. And a big thanks to all the investors who have joined, all those clients who have gone through. Please do analyze this fund basis your risk profile. And I'll take away the Siddharth, what Siddharth said is, if you are not investing in equities, not specifically talking about this fund, but that is also a risk. So please do access that. And we are happy to engage with you all again if there is any query. Thank you, everyone, and thank you,
Thank you.
Siddharth, for joining.
Thank you, Abhishek. Thanks for having us. Thank you to all the participants. Really look forward to your investing in the fund. Happy to come up in the next session whenever it comes up. Thank you.
Thank you. Thanks, everyone.